Hello, everyone. Welcome to our webinar today. My name is Catherine Ring. I am the VP of Marketing for ZSuite Tech, and with me today is Nathan Baumeister, who is our co-founder and CEO. He's going to be presenting to you today. Just a couple of notes as we get started. We will be sending everyone a copy of this presentation immediately after the webinar ends. So you will have this to watch again or share with people if you want to do that. We have found that this platform works the best with Google Chrome. So if you have any issues with sound or with viewing, you might want to try in that browser. I will be here answering questions, and Nathan will also be happy to answer questions as we go through. So don't hold back. We're happy for this to be interactive. I think that's all of the kind of announcements. So Nathan, please take it away.
Awesome. Well, thank you for the introduction, Catherine, and very excited for all of you that have decided to join our webinar today in regards to growing specialty deposits with digital escrow and subaccounting. We've had the unique pleasure of working with financial institutions in the United States since 2019. It was actually in the summer of 2019 when we spun out from a bank that had some software that the bank was working to grow deposits in a very specific vertical with property managers and landlords. And it got to the point where those products that they built, some other banks were raising their hand and saying, hey, we might be interested in using these services. And that's when we spun out and created ZSuite Tech. If you could imagine back in 2019, most banks weren't looking for deposits. It wasn't a huge thing that financial institutions throughout the U.S. were looking to grow. But of course, we were able to find some. And as we were building out our company, we knew that we wanted to help financial institutions to grow deposits in the commercial space. And in that, we knew we didn't want a general market platform. We wanted something that was a little bit more niche and unique. There are so many financial institutions in the US, and so many of the offerings are broad-based and not really specialized or niche, but it's hard to grow when you're trying to go after everybody. And so as we were building our company, we started learning more and more about commercial escrow and commercial subaccounting. And it was one of those things that when we first heard about it, we were like, oh, that's pretty interesting. And then we learned a little more. It was like, well, that's interesting. And then we learned a little more, like, man, this is super interesting, to the point where we decided, hey, this is actually what our entire company should do, because there was a huge gap in the marketplace. And the gap exists in two different areas. One is in understanding the opportunity that exists for most financial institutions in the US. As we have talked to hundreds of folks over the last several years, the percentage of bankers that understand what the deposit opportunity is with the commercial escrow and subaccounting and what it takes to actually build out that portfolio is extremely small. And so that was part of the gap that we found, and we were excited to figure out how to exploit. And we're going to be talking about that here during our webinar. But then the second gap was even the financial institutions that knew about the opportunity, the technology that existed to support these types of commercial customers, as well as the types of processes, was extremely inefficient and really hadn't been updated for a very long time. So those are the two things that we want to do. First, we're going to start and talk about the opportunity, what it is, how big it is, as well as provide some very specific examples, not to say this is what it all entails, but to start get your creative juices flowing. And then second, we'll actually do a demo of the product itself to be able to show you the different ways that it can be used and see kind of in real time how our platform can help you capitalize on these opportunities in an efficient fashion to help you grow deposits in this particular vertical. So to get started, when we talk about commercial escrow and subaccounting, there's two overarching use cases that we find the opportunity falling under. The first one is three-party accounts. So when you have a three-party account, you have the financial institution where the money is being held. You have a company, this would be your commercial customer, commercial client, who's actually the one that is managing the funds. They're holding the funds. However, the funds actually belong to someone else. In this case, we have the circle referring to it as the customer. When you have three-party accounts, basically you break the underlying hierarchy of data and ownership that is built into the banking technology ecosystem. The other opportunity that exists when three-party accounts, besides just breaking the hierarchy of the infrastructure of the baseline architecture of the software that you all use to run your financial institutions on a day-to-day basis, is this is oftentimes a very heavily regulated type of account. Now, when we talk about regulation, most of you would be thinking about banking regulation. And yes, there are specific bank regulations that tie to how three-party accounts or escrow accounts or custodial accounts or trust accounts are handled. However, that's not the bulk of what we're talking about. The bulk of what we're talking about is oftentimes there's legislative requirements that are not focused on what you as a financial institution needs to do, but what the company can do with these particular accounts. And to make it just a little bit more complicated, just so you can understand a little bit more of the marketplace that exists, there's actually 3 layers of legislation that could exist. First, it's by industry. As an example, a law firm has specific rules of what it can do versus a 1031 exchange qualified intermediary versus a funeral home versus a municipality, right? So different industries will have different rules or standard operating procedures with these types of accounts. The second is going to be use case. So let's just drill down on a law firm as an example. They typically will have their IOLA, IOLTA, or IOLA account. Again, that depends on which state you're in. But they'll also have custodial trust accounts. They might also have other types of accounts that have different rules. For example, there's several law firms that receive retainers for clients, but they can't actually take in those funds as their own money until which time they actually billed for the services that they use that retainer for, right? Each of these use cases might have different rules, regulations, standard operating procedures. Then the third level is actually all the way down to the legislative level, that it could be at the local legislative level, it could be at the state level legislative level, and it could actually be in the federal level. So there's a lot of opportunity for complexity and a lot of opportunity to mess this up, if you will, in these three-party accounts, which is one of the reasons that we exist as a company. So that's the first big use case, is three-party accounts. The second one we refer to as sub-ledger accounts. And so when we're talking about sub-ledger accounts, basically what you should think about is that you have a commercial client who has a bunch of money sitting in a particular account. However, they have a need or a desire to subdivide that money for different use cases. You'll see here that we have an example from a municipality. Let's say they have 800,000. However, that 800,000 is actually already spoken for different projects that they have. And so they would have a desire to create this sub-account to be able to set that money aside and provide a string of accountability of how these funds are being used and when they're being used. So if you think about, again, your commercial clients, your marketplace, the two overarching use cases, three-party accounts and sub-ledger accounts. Now, what are the verticals that we see who are using these on a day-to-day basis to run their business? You can see them up here. I'm not going to read them all. We've already talked about several of them, and we're going to dive into some specific examples. But one of the few things that I wanted to touch base on the overall marketplace as you're looking at these types of verticals is there are trillions of dollars of deposits in the US that are sitting in digital escrow and sub-account use cases that are being grossly managed in regards to the level of efficiency for both the financial institution holding the funds as well as the commercial customer. So the size of the deposit prize here, if you will, is quite large and is a big opportunity and is currently dominated by just a few very large banks within the US. So that's great from an overview. Okay, cool. There's these different verticals. There's these two use cases. Awesome. And I've been sharing this over the last couple of years with financial institutions across the U.S. And most of the time at this point, I'm still getting a little bit of, okay, but really what's going on here? So what we wanted to do is we actually just wanted to share a few stories of some verticals, as well as some banks that are going after these verticals or financial institutions that have been successful in growing specialty deposits through commercial escrow and subaccounting. So the first one that I actually want to share is going to be on 1031 exchanges. So 1031 exchanges, if you're not familiar with them, this is an IRS code that allows people, for a long time, it was any like kind exchange of assets, but now it's relegated to just real estate, where if you sell real estate, whatever gain that you get from that real estate, you can actually use to purchase another property without that gain being taxed at that point in time. So it's a tax deferral strategy. In order to do that, the person that is selling the property and then buying the property has to use a qualified 1031 intermediary to be able to facilitate the whole transaction and make sure that everything is above board. These qualified intermediaries you could find in a bunch of different ways. Sometimes they're title companies, sometimes they're law firms, sometimes they're actually banks that act as these qualified intermediaries. As that money is being held in between the selling of the property and the purchasing of the property, guess where this money sits? It sits in an escrow account. The 1031 qualified intermediary is the person that's holding the funds. And then, of course, that money doesn't belong to that qualified intermediary. It actually belongs to the person that is buying and selling the properties. With 1031s, it's a great opportunity for banks to be able to grow deposits. There's two typical go-to-market strategies, and you can mix them if you want. But one is I'm going to bank qualified intermediaries. This is a great strategy because those qualified intermediaries, it's their business to keep a constant running business of balances that are coming in and then being held in these exchanges. The other go-to-market strategy would be the bank acts as the qualified intermediary. This is a great way. The pros here is that there's no additional middleman with the qualified intermediary. However, what you have to do as the bank is go find the people that are buying and selling properties to then use you for your 1031 services. The reason that this gets extremely complicated is that most of the time when you're doing these types of exchanges, interest is a big factor, especially now that the yield curve has shifted up so much. And this interest oftentimes is split. A portion of it goes to the qualified intermediary, a portion of it goes to the person that's buying and selling the properties. You have to open and close these accounts on a fairly consistent basis. The qualified intermediary is looking for specific data to be able to make sure that they're following all the rules as set forth by the IRS. Oftentimes, the person that is buying and selling the property and using the qualified intermediary wants access not to move the funds, but to see that they're there. And all of these things create a lot of headache for the typical processes used to manage it. Now, as far as opportunities go here, there was one bank that really decided to focus on this 1031 space. The target that they were going after, or their go-to-market strategy, was to go after qualified intermediaries. So they worked with us. We discussed what it is to look for qualified intermediaries, how their instance of the ZScrow platform could help manage these types of accounts better. And within 2 months, they went from $0 to $17 million in deposits with a few quick wins that allowed them to be extremely successful in a short period of time. And you can see this quote here: "I love the system's ease of use, navigation, the convenience of doing online wires natively through the portal," as one of this 1031 exchange customer. So that's the first example. Again, I'm just trying to give you a sense of what is this opportunity? What does it look like, so that you could be thinking about what might exist in your spot or in your marketplace. So let's talk a little bit about property managers. Property managers make great banking clients. They have a lot of lending needs. They have a lot of deposits. They have a lot of cash management needs. So there's an opportunity to grow all up and down the balance sheet, as well as all of the profit centers that you have as a financial institution. Now, our product, the ZScrow product, does not help you focus on getting those commercial loans. But obviously, as you're going to market and figuring out how to attract that business, that's great. But how can you ensure that you could get their deposits and their operating accounts? The main use case that I just wanted to share for today's purposes are going to be for security deposits. However, there are a lot of other examples of how property managers can use the ZScrow platform from a cash management perspective as well. But what we find is that with security deposit accounts, some of you might not have ever thought about it, it's actually just an escrow account, right? The money that a tenant gives to the property manager is not the property manager's money. It is still the tenant's money. However, the property manager is holding onto it. So this is another example of a three-party account. Now, this is a highly legislative area of concern for certain states in the United States. And the rules will vary state by state, and sometimes even by local level. As an example, in Illinois, the Chicagoland area has specific rules, and everyone else in Illinois has a different set of rules. New York, New Jersey, though they're right next to each other, have very different rules. Massachusetts has different rules. Florida does, California does, et cetera, et cetera. So I'll just paint the picture for a property manager in Boston, Massachusetts. I'm just going to pick on Massachusetts because that was the state that we got founded in from ZSuite. That was where the bank that we spun out from was. So a property manager in Massachusetts, when they take on a security deposit account, first, they cannot commingle that money with any other money. So it literally needs to sit in a separate account. Second, it has to be interest bearing, and all of the interest has to go to the tenant. So again, you just think about this. You need to open up individual accounts. You have to make sure to collect a W-9 or W-8 form to be able to both calculate as well as disperse interest. Make sure you can do the 1099 INT reporting. When the account is opened, the tenant has to be informed that the account's been opened, the financial institution where the account is residing, and what the account number is, and it has to be done within 30 days. I already mentioned that interest has to be earned. It has to go to the tenant. That interest cannot sit in the security deposit account until which time it closes. It actually has to be dispersed in an annual basis. And if at any point the landlord or property manager who's responsible for holding the security deposit does not follow these rules, the fee is actually 3 times the security deposit amount. So it's a huge pain point. It creates a lot of pain for both the property managers as well as for the financial institutions holding the deposits. This is exactly one of the things that our platform looks to do, is to automate as much of that as possible and to make it so that it is not so heavy for the property manager, for the financial institutions to actually support these accounts. As you look at property managers, this is actually one of our largest verticals based off of number of accounts that are being managed as well as deposits. If you could imagine someone that has 50 units, 1,000 units, 10,000 units, there's a lot of deposits that are just sitting there. And if you can help a property manager with something that provides as much pain as security deposits, the likelihood that then you're going to be able to get the rest of the relationship is extremely high. All right. Now let's switch gears and talk a little bit about nursing homes. Again, the whole purpose here is just sharing with you different stories so that you could be thinking about what this opportunity might look like in your marketplace. So nursing homes are pretty interesting because what happens with a lot of nursing homes, and there's different types of nursing homes. And this one, we're talking about memory care facilities and assisted living facilities. Once a resident moves into a nursing home in that type of regard, they actually, most of the time, don't have the ability to manage their own money. And so the nursing home itself actually takes over the management of the money for their individual residents, both for paying the nursing home as well as for their various incidentals. So again, this is a great example of a 3-party account. The nursing home is the commercial client that's actually holding the money, even though the money belongs to the resident themselves. As you look at this, there's a lot of tracking that's required. If you could imagine, there's a lot of accountability that the nursing home has to provide to various different regulators to be able to show that they are not taking advantage of their residents, that everything's above board. And so they need lots of tracking of these transactions that are coming across. They need very specific reporting to be able to show all of that as they go into looking at the management of these accounts. We have one financial institution. This happens to be an area of focus for them. And they actually went after and built this business before we even had existed in the marketplace. And they had accrued over 18,000 of these individual nursing home customers with lots of deposits that are sitting in and a lot of transactions that were going on. But as they were doing it, they were finding that both opening up all these accounts and closing these accounts and interfacing with the nursing homes was an extremely manual process for them, to the point where they stopped trying to grow this business, until which time we actually got together and are working on bringing their old system of how they were doing that with our new platform, so that all those manual repetitive tasks that were making the cost to serve way too high, and the management of them way too high, to be something that now it's a business line that they're going to continue to lean into. All right, we have two more here. One, just talking about municipalities. Municipalities have lots of deposits, and I know not every financial institution, with some are very excited to work with municipalities. Some prefer not to. A lot of it kind of depends on which types of deposits and those types of things. I have a great quote from one of our bankers that we work with that, when we were talking about the ZScrow platform and we were talking about these escrow accounts and sub-accounts, she said, the percentage of deposits that comes with the municipality relationship that it sits in escrow or sub deposits usually makes up maybe 10 to 20% of the total deposits. However, it makes up 90 to 95% of the headache. And that headache, again, is both for the financial institution as well as for the municipality. So by going to market with this to help with some of those most complicated, most pain-ridden processes, it allows them to cement the relationship, become that primary financial institution for the municipality, getting deeper into the actual, being that primary banker with their operating accounts. Within this space, there's a lot of use cases I already mentioned. We talked about one right up front where it's just the subledgering, right? Where they have a big group of money and they have specific funds that have been earmarked to be used for specific purposes for an accountability. Sometimes that accountability is just for the internal employees to be able to show to their controllers or whatnot that they're managing that money appropriately. Sometimes we actually ran into a couple places up in New England where a municipality would actually have a third party assigned as kind of an overseer of those funds. So they actually had to provide those statements and balances and transactions to a third party to be able to make sure that those funds are being used appropriately. You have retainage accounts and holdback accounts and surety bonds. Those are all the general idea with them are the same. You have some sort of arrangement with the contractor that's going to do a bunch of work. They have to put a portion of the money that would be used for that contract in an escrow account in case anything goes wrong. You have custodial or custodian accounts where the government might be holding money for and on behalf of minors. You have asset seizures and holdbacks, various different use cases with school districts. There's just a lot of these things. And again, there's different rules for different places. One of our clients or financial institutions out in the East Coast, they were actually really decided to focus on municipalities. They've had a couple wins where they had about 2 million of deposits from those, and within 4 months, they were able to get 6 more municipalities and grow that 2 million portfolio all the way to 7.5 million. In that short time period, which is a great way for them to kick off this vertical and continued growth in it. All right, so the last one I want to go through is going to be on the health side. So a couple different use cases within the health industry. I'm going to focus on this one specifically, which has to do with claims management, benefits administration. So in some cases with insurance payouts for various different reasons, if there is a settlement or there's money coming to the individual, sometimes there's caveats that money can only actually be used for medical expenses. So in those cases, the insurance company won't actually send the funds to the individual themselves, because if they do, then that individual could use it for whatever things that they might want to, even if it's not medical expenses. So they'll often employ a third party to hold that money for and on behalf of the individual. And then the the hospitals and the billing actually goes directly to that third party account. So that's a big use case that we've run into. With that, there's huge deposits that are sitting in these accounts. It's important to be able to have these accounts to be FDIC insured, to have individual beneficiaries set up for each of them. There is a lot of interest splitting and tracking that has to go on for this. And I've had some great success building out the relationships here to help our financial institutions grow their deposits in this particular vertical. So for right now, I'll go ahead and stop and going through all these different stories. Hopefully that helps you to start thinking. Obviously, we could continue to share various different stories that happen from that perspective. But the overall picture that I would love to share is as we built out the ZScrow platform, which is our platform. ZScrow is the name that we call it. Our financial institutions can call it whatever they want. It wasn't until the summer of 2021 when we actually launched it. When we launched it in the summer of 2021, we spent both Q3 and Q4 of that year with very, very few accounts, very few deposits. You can see is 3 million for that time period, because we wanted to make sure it was a new platform, it was working well and all that stuff. So it wasn't until 2022 that we really started working with our banks in a big way to grow their deposits in these particular verticals. And you can see right here that growth that we've been able to see for and on behalf of the financial institutions we work with, showing that there's been some great adoption all across the United States, all across multiple verticals, not just the ones that I shared with you today. And just because it's always fun to get a quote from an actual user of the platform, and one of our clients is Yobani, who works at Encore Bank, and you can see what he had to say about working with our company and with the ZScrow platform to be able to unlock some amazing opportunities for them on the deposit growth side. So what I would like to go through next is a little bit of a demo. So as I mentioned, there's kind of two themes here that I wanted to cover. One was just to talk about the deposit growth opportunity. What does that market look like? What are the actual use cases so that you can understand why it is complex and why it's difficult to manage these types of things? And then the second one is to show how you might be able to manage these in a very effective and efficient fashion. So I'm going ahead and pull up our demo site. Focus Federal Bank is the demo financial institution that we are using here. And you can see each of these individual tiles are representative of the banks, Focus Federal Banks, commercial clients that have opted to use the ZScrow platform to manage their escrow accounts and sub-accounts. As we build out the platform, it is a web-based application, so it's available in any web browser, and it's both responsive and adaptive. So whether they pull it up on their phone or they pull it up on the tablet, doesn't make a difference. We make sure to optimize the user experience for whatever that might be. There's 3 levels of access to the platform. The first one, and what we're looking at here, is the bank's level of access. You're able to see all of the commercial clients that are using the system. You can drill down to any of the ones that you are specifically looking for through both the search as well as just through scrolling back and forth. There's various different settings, reports that you could pull, as well as the bank has the ability to click on any of their commercial customers and dive deeper into how the commercial customer is using it, what are the accounts, get the data, help them out, do things on their behalf, all of that fun stuff. So that's the first level of access. The second level of access would be for the commercial customer themselves. So if we picked on Bishop, Blaine, and Braxton here, that's a law firm. They have $5.9 million across 51 sub-accounts. They are able to log into the platform and they are able to do lots of different things, right? They can view the total balances across all their sub accounts. They can see the transactions going in and out of their master operating account into the sub accounts, or the sub accounts into their master operating account. They can pull all their statement information. They can pull their own reports and download it into CSV files and do all that fun stuff. And here, as you can see, they can actually manage all of their escrow accounts and sub accounts in this panel. If they don't have lots of different escrow accounts, they could have them all just listed here. They can search to the ones that they need, etc. However, as you can see here, they actually have them organized into folders. Creating folders is super easy for them to just come in, name the folder whatever they want, and then drop the appropriate sub accounts into those folders. And we also can create various different levels and add child folders, rename them, delete it, do all those fun things to be able to dive deeper into how it is that they're actually managing or organizing these accounts. This data hierarchy from a folder perspective actually follows through in both the statements as well as any of the reporting, so that they can have that organization all throughout. Their ability to then not just see and view that information, and I'm going to go ahead and go to another use case here. You saw a law firm use case there. Now let's go to a property manager. Maybe they're using this as a subledger for their security deposits. So you can see here their folders are different, right? Their folders are based off of buildings. Once they have a new security deposit, the commercial customer themselves can self-serve, create the sub account all on their own, name it whatever they want. Maybe they have an internal ID they want to tie it to. Maybe they want to put the beneficiary's name. Maybe they just want to put the unit name. Whatever they want to do that makes sense for their business, they can name the account whatever they want. We have various different beneficiary types. Is it individual? Is it a business? Or is it a no beneficiary account? In this case, it's a property manager that is holding a deposit for and on behalf of a tenant who is a resident, which would be an individual. Since this is set up as an interest-bearing account, where at least a portion of the interest is going to be going to that beneficiary, we need to get a W-9 or W-8 form. That's why we're asking if they're a U.S. citizen or not. Then I'm going to drop it into the appropriate folder. Let's say it's 5412 Oak Lane. By going into 5412 Oak Lane, we've now created the sub-account. There is some documentation that we need to get, however, to make it an active account. As we mentioned, it's an interest-bearing account, so we need to get a W-9. Our platform allows the commercial customer or you as the banker to be able to get this through DocuSign by emailing that beneficiary. So they just put the beneficiary name and email address. The system is directly hooked up with DocuSign. An envelope is sent directly to the beneficiary where they can fill out that information and get all of it nice and clean. All of the data comes back automatically to the platform, inclusive of a PDF of the electronically signed document. Now, sometimes we do run into some of our bank's commercial clients. They're like, look, I have a process. I'm not going to change my process. I'm not going to use DocuSign to get a W-9. An example from a property management space is, let's say that they make sure to get a W-9 when they get the lease agreement signed. That works too. They can always come in, take that W-9 that they collected when they got the lease agreement, fill in this information from that W-9. The next screen is they can actually upload that document electronically so that there is a data artifact showing that W-9. If they don't have it right now, they can always finish it later and come back to complete it right here within the user experience. From here, they can edit beneficiary information. They can transfer funds in and out of those sub-accounts. They can close sub-accounts. This is inclusive of calculating any interest and posting it to the appropriate place. Basically, the idea here is that the large majority of commercial escrow and sub-accounts are being managed manually through phone calls, emails, etc. This allows the commercial client to actually do it all on their own. They can self-serve. Now, I'm showing all of the self-service aspect through the user interface. It demos nicely. However, we have built the ZEscrow platform to be an API-based platform. So whether we receive the instructions on what to do with an escrow account or sub-account through the commercial customer, pointing and clicking and typing in information through the user interface, or we're getting the information directly from like an Excel spreadsheet or a CSV file or some other type of flat file like a JSON, or if we're getting the information from a direct connection to your commercial client software via an API, we actually don't care. And we have all of those being used across the hundreds of commercial clients that are already up and running on ZEscrow. So no matter what the modality is to be able to do this, it makes it very straightforward. Just a quick story on that. There was a financial institution we were talking to who is a client now, but at the time of talking with them, they were not. They had won some business where they had some escrow accounts that were part of the business that they won over. It was a couple thousand accounts. In order to actually get all of those accounts opened and do the whole process, they took this branch staff of one branch and set them aside for 2 weeks to actually go through the process and opening up all those accounts. If you could imagine, when we shared with them, man, the data that you use to open up those accounts, we have it in an an Excel spreadsheet. We can get all of those opened up overnight. Right, or basically instantaneously as soon as we upload it into the platform. One of the reasons why they decided to start working with us, which has been a great partnership. Now, I've shown you a couple different use cases, as well as we discussed multiple different use cases. We've talked about the complexity of different industries, different use cases within those industries, as well as the legislative burden that could be at the local, state, or federal level. So I want to show you real quick just how it is that we can use this platform to fulfill the requirements of such a broad base of use cases across so many different levels of complexity. So I'm at the bank's view, or the financial institution's view of the product, and I clicked on the settings tab, and we are in the sub-account configuration area. You can see a bunch of these here. These are templates. So what we do is we are able to build templates that define the rules that manage a particular sub-account. And then we can apply those templates to a whole bunch of your commercial clients. We can apply it to a specific commercial client, or we could apply it to a specific sub-account. So if you have New York tenant security versus IOLTA, and for each of those states it could be different. So we could have a New York IOLTA, we could have a New Jersey IOLTA, we could have a California IOLTA. All of these different configurations can then be applied appropriately. So what are the types of things that we're talking about? Well, as an example, the type of thing that we're talking about would be like interest, right? Is this an interest-bearing account or not? If it is interest-bearing, what's the rate? Who does that interest go to? Does it go to the beneficiary, like in the case of a custodial trust account at a law firm? Does it go to the organization, like in the case of a municipality using this just to subdivide their own funds for earmarked purposes? Is it split, which is often the case for a 1031 exchange? A portion of it goes to the qualified intermediary, a portion of it goes to the person who's actually doing the exchange. Is it another party, like an IOLTA account? And then if it's split, there's further questions that we need to understand. When that interest is earned and a portion of it goes to the organization, does the organization take it as a fee, or does it take it as interest? And then how do we actually calculate that breakdown? Is it a 40-60 split? Is it a 30-70 split? Whatever it is, we can build that into the template. And then where is that interest posted? Are there any automatic sweeps that need to go in? Do we need to add additional tiers, like from a balance perspective? Lots of different things that you can do within the templates. A couple other examples of things that we often run into might be some notifications. I shared with you that there are some escrow accounts that require an account opening notification to be sent to the beneficiary within a certain time period. We can automate that through these templates. In some cases, as a financial institution, you are not required to provide statements to beneficiaries. You just need to provide statements to the organization managing the money. However, that organization might need to provide statements or might want to provide statements to the beneficiary. We can automate that through these templates, so on and so forth. It gives us a lot of flexibility. Now, if you can imagine, there's a lot of complexity in this space. So the last thing that I wanted to share is, though we are a software company and ZEscrow is our technology platform, we understand that software and technology is not the solution. It's only part of the solution. So I oftentimes joke, there's not a lot of people in the United States that wake up in the morning thinking about escrow accounts and go to sleep thinking about escrow accounts, but that's us. That's all we do. ZSuite Tech, that's us. We're nerdy when it comes to escrow accounts and sub accounts. And so we want to make sure that when we are working with financial institutions, we bring all of that to bear. So we don't just provide the technology, but we also provide the support and services where you should just think of us as an extension of your team. So and it's all along the client journey. So whether it's doing demos for a prospect who's thinking about using it, or a current client of yours that you currently don't have their escrow business or sub-accounting business, but you want to show them how this might be able to help them, we'll be there and do that demo right there with you, right there with your team. Let's say that it's a new use case or a new vertical, and you need to figure out what the requirements are to know how to build this template. We'll be right there gathering those requirements and making sure we understand so that we can build those templates in an appropriate spot. Let's say that you have a new commercial client that wants to use this platform, but it's a technology company and they have a robust API set, and they're saying, hey, I don't want to use the user interface. I want it to interact directly with those APIs. Again, we're right there to be able to help all along the customer journey, whatever it might be. So with that, that's the demo that we wanted to go through to share with you what the platform actually looks like. As we are wrapping things up, just want to say again, thank you so much for your time. As I look at the clock, we do have plenty of time. If there are any questions from a Q&A perspective, I would be happy to address any of those questions. But you can see here my my direct email, and you could send us any information, as well as our website where you can gather any additional information from that perspective. And I think Catherine had mentioned earlier that post this webinar, I do believe that you will be getting some follow-up information.
Yep, absolutely. We'll just leave it open a minute for any questions. Nathan, what do you think are some of the best use cases that you've discovered along the way here?
Yeah, well, best is an interesting question because I like novelty. So when I think best, I think of the weirdest because it's kind of fun. But from an opportunity perspective, I think that's probably the best way to look at it is, where do we see the most opportunity? It is going to depend financial institution by financial institution in which market that you're in, as well as what verticals you might already have some penetration in. Because really, in the end, the best place you can start is your current client base, because your cost of acquisition to get those clients on is going to be a lot less, and you don't have to, find new clients, at least to get the initial baseline of the deposits. But the verticals where we have seen the most adoption across the United States, across all of our financial institutions, are going to be three. It's going to be municipalities, it's going to be law firms, and it's going to be property managers. Those are the top three that we see from a penetration perspective. Now, like I said, though, that could be deceiving because we have run into multiple other use cases that have created huge opportunities for our financial institutions that don't fall into those three categories. I think so far my favorite one that we've run into, because we just had no clue about it at all, was aviation escrow. So I personally have never chartered a private flight, maybe one day. But what we found is when you charter a private flight, there's actually an escrow account that's required to be created as part of that charter before it happens. And there's certain providers that typically will provide those types of services, and there's certain requirements. So it's just something that we just had no clue what this was about, and we had someone reach out to us and share that they were looking for a better way to manage it, and they started telling us about it, and we're like, oh yeah, our software does that too.
Oh, that was a cool one for sure. I think my favorite from a novelty perspective was the egg escrow. That was a good one.
Absolutely. We almost decided to rename our product Eggscrow.
Eggscrow. It's the Eggscrow. That's true.
That's not true, by the way.
No.
The egg escrow is true, but the renaming of Eggscrow is not.
Exactly. Well, good. The last thing, the other question that we get a lot, and so I'm wondering if anybody is thinking this, is just about what implementation is like. Who the key people are and how long it usually takes. So do you want to just take a minute to address that?
Yeah, absolutely. So when we launched the ZScrow platform, there is one system that there's a requirement that we have integration, and then one where there's option. And none of you on the phone are going to be surprised by my answers in this case. The first one that we require integration with is the core. Now, the type of information that we need from the core is actually pretty vanilla. It's pretty standard for different types of data that comes out from your core for any other types of technology that you might use. Balance information, transaction information, some demographic information. The other one that's optional, it's not required, but it is optional. And it is something that when we can do, we always want to do, would be a single sign-on with your digital banking provider or your cash management tool. That just helps to allow, the username and password and all those different types of things to pass through automatically, where you don't have a commercial client that's going to need to manage different things. Again, it's not required. We can run without single sign-on, but when we can do it, we prefer to do it. The long pole in the tent oftentimes is getting the extract or that data exchange between the ZScrow platform and the core is typically the long pole in the tent. More often than not, we're seeing that we're able to get financial institutions up in 90 to 120 days. For some of our financial institutions that have, a pretty good team that has some sort of reporting database where they can pull off extracts fairly quickly, oftentimes we'll get that down in less time than that. Also, if you could imagine, we work with, I think we're at 73 banks right now, right around, 70 plus. And so if you can imagine, we have worked with a lot of different cores, a lot of online banking providers. So depending on your core, we have different playbooks that are available, which might, speed up the process as well.
Yeah. Great. Well, I haven't seen any questions come through, which is totally fine. We just always love to be interactive. But I would just like to thank everyone for coming today. As we mentioned, you will get a copy of this afterwards if you need it for anything else. And of course, always feel free to reach out. Thank you.
Thanks, everybody.
Bye.